Alright guys, hello and welcome. My name is Lucas. Today I'm going to present you how to screen for comparable companies and comparable transactions using Thomson Reuters and Merger Market. This should provide you with a guideline on how to do that, which steps you should follow, so you can do it by yourself. So first of all, before you're going to evaluate your company, you have to gain a comprehensive understanding of the company's business model, and the industry it is operating in. So this means that you have to classify your company, and there are a bunch of industry classifications such as Thomson Reuters business classification, GIGS and NICS. GIGS and NICS are very common. So anyway, so you have to classify a company and really know where your company is actually operating in. So for example, let's say you're going to try to find a peer group for energy. Energy is a energy company, an infrastructure multi-utility company, and so you have to know, okay, before I'm going to screen in the industry, what are they actually doing? So you search on energy for company presentation, for research reports, for whatever. You can also go to Yahoo Finance or Wall Street Journal. There's also a business classification. But you can do it also by yourself. For example, type in here Thomson Reuters business classification. There is a PDF that gives you all the various industry classifications. So, for example, energy is an energy company. However, it has no coal and no fossil fuel business. It has a renewable business that would fit. Uranium wouldn't fit, for example. Okay, let's search deeper. It's also a utility sector. Let's see, industrials, transportation, consumer cyclicals, what the fuck, sorry, retailers, I don't care about this, consumer non-cyclicals, okay, financials, nope, healthcare, nope, technology, nope, telecommunication, utility, here we go. So for example, energy has a renewable business. We just said it's an electricity company, and this classification here would fit, for example. Yeah, not nuclear, but those two would fit here, for example. So now we got energy classified as a utility company operating economic sector of utilities. The industry subsector is also called utility. It is an electric utility and blah, 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 a PP, yes, company, and activities, yeah, obviously electric utilities and renewable utilities. Yeah, okay, so far so good. So now we go to Thomson Reuters. You will find the Thomson Reuters screen, the Thomson Reuters terminal in the library, LC building, second floor. There you can log in. I got it here on my computer. Then you type in screener, and first of all, you start very broad, industry group. Okay, so you want to search for companies in the industry group, whatever. I use TRBC here. TRBC industry group classification includes. We just said it's utility. Yeah, and electric utilities and IPPs. So far so good. Water and related utilities. Multi-line, I don't know what that means, but maybe it will fit. So we just start very broad. Here we have 1,000 companies in this sector globally. Then we have to know. We dig a little deeper. We have to know, okay, where is this company situated? Is it only operating European-wide? So energy is a German multi-utility company, but it's operating, obviously, I think, European-wide. You can search for European peers. Then we have to say, okay, if energy is also has also competitors globally, we have to understand, okay, are those companies in the US or in Asia, do they have the same business model usually? Do they have the same margins? Do they have the same regulations, government regulations, and so on? Usually they don't have this, for example, because it's an infrastructure company that's usually from government to government very different in terms of taxes, in terms of regulations, and so on. So we just search here for country of headquarters in Europe. Let's keep America outside for now. Okay, we got 338 here. So from 1000 to 338. Then usually we want a company that has a very good market capitalization. Why is this important? Because if you have a company with only a market cap of, let's say, 1 million or 2 million, usually for utility it wouldn't be the case, but if let's assume that it would be the case now, usually this company is too small, it's not very covered by equity research analysts or any other coverage teams, and most investors wouldn't trade it very frequently. And for example, if you want to get the beta of the peers, we want a beta that is good, that is not biased, that reflects market conditions. And if it has only a market capitalization of 2 million, it wouldn't be traded very good and very frequent. And this means that the beta could be biased and not really reflecting the market in a sound way. So that's why we search for companies with a market cap above a certain amount of, let's say, 100 million or 10 million. You can also say 10 million, but let's try that. How many do we get? So we get 31. That's good. So then we accounted for size. So we screen for industry, location, I hate MacBook. Location, then market cap as reflecting size, and then liquidity. Why liquidity? Same reason as with market capitalization with size. You want a company that is heavily traded, so that it has a good beta and not biased beta that reflects market conditions. Okay, so here we're going to select average daily value traded for 52 weeks. Here we say, okay, the daily value traded should be on average 100k. So we got 73 companies. That's also not bad. If you assume that this is only Europe actually, then you can screen further for financials, for example margins or DE ratios. Usually you don't do this. You can do this if you want really to account for financials as well. If, for example, an industry has I don't know which one, but let's say an industry has usually EBITDA margins of 60%. You want peers that have very similar margins, you can screen for EBITDA margins. Or if you have a metals and mining company, they have usually above 1 times D ratio, so 100%, so more debt than equity. You can screen also for people who have more leverage, so to account for leverage here as well. But usually you don't do this. You can do this in the end. Then you can go further and screen for business description. If you are really certain that this company has 3 segments that every peer should have as well, because all segments, they have equally sharing, for example. So revenue sharing, and you want all peers with the same segments. You can search for segments here, for example. So what you would do is, for business description, contains, I don't know, for energy now, I don't know how many business segments they have, but let's say you have a company that has three very similar segments. You can type here something like, okay, I have a company that they have only a renewable business, renewables, or let's say renewable, because maybe renewable, and don't know, like you want a company that for sure produces water, electricity using water, or transports water or whatever for heating. So maybe that should be included. Another one could be don't know, maybe a company, an infrastructure company that is also engaged in transportation of electricity, so the business description should also contain transportation. Then you can say all these three should be included, or renewables or water and transportation, or renewables or water or transportation. Then actually you would get the same amount as we have without searching for it, because yeah. So you can also search for keywords here in the business description, but we don't do this because if you're not certain, you will wait. Yeah, and this is actually it. Then here we can select. Okay, so it's market cap. You want the company's market cap. You want the average daily value traded. You want the industry classification again. Oh, it's here. Okay, industry group. That's good. Then you want, for example, some multiples. Type in EV sales. Then you want not only the multiple for 1 year, for current, but also for the last 3 years. So you go here for fiscal year, last 3 years. You can do the same for EBIT and so on. It's really straightforward actually. So this would be also very interesting for your peer group table afterwards in your presentation, as a hint. Last 3 years. Then okay, let's search for beta. Usually beta, you go for either a 5-year monthly beta or a 2-year weekly beta. It depends. Usually you want to have as much data points as possible. Daily beta wouldn't be a good fit because it could be biased with outliers. That's why we use 5-year monthly mostly. That's also what Big 4 companies are using. Yeah. Then you want market cap. Okay, fine. Then you want enterprise value, for example, as well, maybe. And let's place this here. This is not so important. So here we got some good data already. That's fine. For example, as Energy is a multi-utility company, as I said, it usually should have a good amount of capex. So you also want to search for capex maybe. How much capex do they actually have? And the peer group as well. Okay. So this would be just for setting up your template. You haven't selected the peers already. So this is what we are going to do now. The company name is not here. Company name. Actually, why this is not here? Okay, company name. Very good. Right. So let's say that this is our template. We have the data that we want to get for every company, and then you can download this sheet. Usually want to have peers screened in Thomson Reuters, where you get a good amount of comparables by screening only for market cap, for size, liquidity, country, and so on. Yeah, if you have, for example, over 100, it would be fairly difficult to look into each business model. So you want to have a good amount, like 50 or 30 to 50 to 60 is a good amount. 73, yeah, let's keep that. Then you dig into each company's business description and screen it if this business description fits the business description of your target company. So all these fields we just selected here will be downloaded by pressing here Excel, export into Excel. So let's see. So this is the sheet we just saw in Thomson Reuters. Then okay, so this is not millions, that's why. Okay, anyway, doesn't matter, it's not so important. Wait a minute. Okay, so now you have to screen in each business description if the company's business description fits your company's business description. So you would screen here for yes if this, so peer group, do I want to have it in my peer group, yes or no? Then you say okay, let's see, multinational energy company, global integrated operator, electricity and gas. Okay, initially has no gas, so that would be no-go maybe. Divisions include generation, trading, infrastructure, networks, upstream gas, and renewables. So that would be a probably fit, even though it has a gas, it has everything else that industry would have. It has also global reach, but it's located in it's not stated here. But anyway, would be probably fit. So let's say maybe. And then you do this with each company. Let's say, for example, RW would be definitely a good fit because it's also German. It's also utility, infrastructure, energy, A2A as well, maybe because I know this. Verbund would be maybe also a good fit. EVN, Austrian multi-utility company. Iran as well. Italy, very good. ACEA as well. So usually, if you know the companies already that it would be a good fit, you would select them in ENIA as well. But anyway, usually you really search in each business model, in each business description, if the segments here fit to your segments of the target company. And then you can place here a filter. Let's say, for example, that all the others are not a good fit. So let's do this quickly, very quickly. Okay. Come on. Okay. So, and then you only select the yes, obviously, and say, okay, wow, I've got only 7 peers. Usually, you want a peer group that, yeah, is good screened. So that means you have 10 to 15 comparable peers. Then you can subdivide it into 3 different groups. For example, let's say that you have a global operating multi-utility company, and all the multi-utility companies in the world have same regulations, have like similar business models and so on. Then you would have also, for example, global peers. Then you can subdivide them by global, then by maybe DACH region or whatever. So you can subdivide them by country. You can subdivide them by segments, or by usually in investment banking and everywhere else, you want like 3 different peer groups. One that is a broad peer group, one that is a more specified, and then the most specified peer group where you have only like 3 to 4 really good comparable peers to your target company. Yeah. But it's a way how to do this. So I hope this was understandable for you, and you can now get started and do it by yourself. So this would be Thomson Reuters. Then there's another way. You can do the comparable company analysis by using comparable companies, or you can also do a comparable company transaction analysis. That means you would go to merger market and search for comparable transactions. There are also a bunch of other programs, softwares like DLogic, for example, where you can do this. So for merger market, you go also to library, second floor, and log into merger market, or you get an account from WUTIS, also our account. You can use our account to log in. Then you go to deals, and same thing. Select first the industry. So this would be classified as utility, integrated utility. Okay, water, sewage, and other systems. You don't know what it is actually, so we'll just select all of them. Then you want to screen for country, you said, right? So let's say target is only in Europe, or regions, or countries. Then you want only the disclosed value. You want to have that the deals are completed. The transaction period should be no longer than 5 years, because usually market conditions would For example, for five years ago, the transactions would have would be completely differently valued than today. That's just macroeconomic thing, a macroeconomic reason, or transactions before the financial crisis would be really highly valued. So you have to know where you is your business cycle actually. But let's say we screen for comparables for the last 5 years. Then you want also only merchant acquisitions, or you want all of them. Depends if you care about the deal type as well. Let's say I care and I only select merchant acquisitions because no PE fund will buy my company, for example. Let's assume this. We got 198 records. That's a big amount, but it's a good amount because not all of them have a value included, and that's a big problem of merger market. There are a bunch of so many comparable transactions, and only from 300, maybe only 30 or 40 of them have a value disclosed, like the value that you want. Just a small hint. Usually you have to create your own template here. You can select exactly what you want to have displayed by downloading the Excel sheet. So here you can select the target company's name. You want the description of the target company, the dominant sector and the subsector is operating in the country where it is located, the headquarter. Same thing with the bidder and the seller. Then, which financials would you like to have displayed? Of course, the equity value. Currency we don't care because we have everything here, I think in euros selected, I'm not sure. But let's say, okay, currency. Then we want net debt. Now we want enterprise value, because then we can calculate net debt. Then we want the EBIT, the revenues, EBITDA, earnings. Then we want revenue multiple, EBIT multiple, EBITDA multiple, P ratio. Usually you only want one multiple because you are going to evaluate a company using one multiple. But yeah, let's display all of them. If you have a FIG company, you also want to have the book value, for example. That's good. Anything else usually is not really important for you. So the forecasts, usually they are not forecasts because nobody would disclose the forecasts, or YouTube financials and so on. That's not important for you because YouTube would be like 2 years back. That wouldn't be important for you as well. You want to have recent values. Okay, then you can say save under this report name and download it. But I have my own one. I got my own one. Okay, where it is? Here it is. Let's download this sheet. Perfect. Okay, I don't want this actually. Control Command or Control Shift would be the selection of your. Wait a minute. Okay, of your column actually. Okay, anyway. Currency, perfect. Net, okay. So usually, as you said before, you have 300 pairs, right? So, okay, 200 pairs. Then you set a filter, and you can see there are not everywhere multiples. So you want to select one multiple that would fit your industry. So as this is a multi-utility company, they have different depreciation and amortizations schedules usually, and capex schedules. So you want to account for that, and you would screen here for EBITDA, because before depreciation and amortization, to only compare companies' business model, the operating performance, and not their depreciation and amortization schedules and so on as well. So you screen here for available multiples. Blanks, yeah, these are just too high multiples as well. That's just not not appropriate multiples. Alright. So here we just reduced the number from 200 to 71. That's good. Here we would just basically do the same as with Thomson Reuters. You say, do these companies fit my peer group? Yes or no? And then it's bigger. You search in the deal description if they have the same business model here. For example, Snip Digit, blah blah blah, Sweden-based incubator has acquired Poly, blah blah blah, a Sweden-based virtualized. Just one final hint. One final hint. If the deal value is just so small, it doesn't interest you as well. Because if your company is a 100 million or whatever billion company, obviously the multiple of a deal value for 6 million would be fairly off from a company that is like 100, 200 million worth or billions worth. Yeah, so you don't want to have this. So you exclude all the small deal size deals. Yeah, like these are too small, just too small. So I think energy is worth, I don't know actually, but I think 50 to 60 million billion. So they wouldn't, these multiples wouldn't be appropriate at all. Okay, let's go for 100, above 100 million, same as with trading peers. So here we deleted over 30 comparable transactions to 45. Yeah. Okay, and then you do the same thing. Like Fortum has agreed to acquire blah blah blah. Also, Finland-based energy company has acquired blah blah blah. Then the company, the Hasflund Farme, is a Norway-based electricity supplier, headquartered in Oslo. Yeah, that would be maybe a good fit. So let's say yes. Consortium of something acquired here another company, and so on. A Spain-based gas distribution company that wouldn't share distribution for electricity. Okay, maybe this is the same thing. So maybe you just want to have like a few maybes, a few yes, and definite no's. Then you can screen again and say, okay, the maybes are now a good fit or not. Usually want here also to have 15 to 20 comparable transactions to have a good range of multiples and for your transaction analysis later. Yeah, so this was it basically. This was everything you have to know for screening for transactions and peers in Reuters and Merger Market. I hope you enjoyed doing it, and this provided you with a good guideline. Thank you, and yeah, see you soon.